Hey, what is going on, everybody? Welcome to another week of the Rapid Review. Interesting week. Trump, Musk fighting, causing some turmoil in the market. So there's a lot to talk about, not in terms of what's going on between them, but in terms of what's going on in the market. So as we always do, let's get ready to go through what went on in this market to get everybody ready to trade next week. All right, so starting things out, current state of the market, uptrend. We are still in a power trend, but that does not necessarily mean that this is an easy money market. We're going to go through a lot of the data. I'll give you my 2 cents. So though we are in a power trend, that does not mean this is a buy everything and have kind of throw caution to the wind type of market. Distribution days, we're at 3 on the S&P, 4 on the NASDAQ. Basically gained 1. Excuse me. We'll call this the feud distribution day. When Trump and Musk were feuding on Thursday, we got distribution day. You can see what we're looking at in terms of the current days. Realistically, we could see a drop off on the May 23rd distribution day. We are getting very close to that 5% off of that close, which would eliminate that day, which is a positive sign that we're moving upwards from that day. But other than that, I mean, there really isn't much else to say about distribution days. We've been acquiring them. It's slowly starting to build up, but nothing too concerning that's making me kind of, run and jump out of the current market. Terms of the week, the S&P up 1.5%, NASDAQ up 2.18%, Dow up 1.17%. And for the year, S&P up 2.02%, NASDAQ up 1.13%, Dow up 0.51%. And we're looking at the moving averages over here. Green on all moving averages, S&P, NASDAQ, and the Dow. Russell still below the 200. But needless to say, green on all those moving averages, which is positive. Like we always talk about, that 21-day EMA, staying above that, keeping the power trend intact, all positive things. All right, so let's jump over and take a look at the charts. So as we always do, we'll start off with the NASDAQ and we'll start off on the daily. The first thing really to note is we had a strong start to this week, continually talking about that 519 high, creating this kind of area resistance previously and wanting to see us get back above that. We had a positive reversal last week on Friday, the 30th. So to see us come in on that Monday and continue that bounce off of that bottom, continue higher, and basically close right around that high range was very, very positive. And we continued that throughout the rest of the week, even looked like we were continuing that through Thursday. The only thing that I saw that was concerning was the volume was much lighter than we've seen in a while. So that was bringing some concern. A lot of the breakouts that we're seeing were lighter volume breakouts. But needless to say, what happened, we know Thursday with the whole feud going on, we had the reversal, big reversal, higher volume than we did have the prior day, giving us that distribution day. But we still maintained above that 519 high, which was a positive. So though it may have felt really, really rough, and I know myself had gotten stopped out of some of my new positions I had put on, we still maintained above that 519 high, which is positive. Then Thursday, we came in and had a nice big up day. We had volume continue to lighten up. But the fact that we were able to hold above that 519 area that was giving us a lot of resistance and have a day like we did Thursday and then rebound on Friday, really, really positive action seeing all that happen. The idea that we've just broken out of this Darvis box type area is really, really positive action. So overall, things are looking good. My main concern is just that we didn't have a lot of volume there. We'll jump over on the weekly. You can see the trend looking overall in a good direction. You can see the volume was a little bit higher, but obviously when you dig down deeper into the daily, you see that a lot of that volume came in on the downside. We'll jump over to the S&P. So this is a little bit more interesting. Most of the time I turn around and I say, yep, pretty much the same action on the S&P or very close to. But the big difference here was that constant battle we had at that 6,000 level. We were really watching the 519 higher here as well. But that 6,000 level was really, really someplace that we were continuing to see resistance. We know those whole round numbers are always an area where we'll see a lot of jostling back and forth between the buyers and the sellers. Um, Up until the very last minute, we battled out at that 6,000 level. Like if we go on to a 1 minute chart, you can see, we zoom out, obviously, there's your day. There's that 6,000 level, how we were just fighting it all throughout the day up until, like I said, that very last minute. You could see that attempt to break down and then just squeak above. I mean, we finished out the week with, what was it, 6,037 cents, like just squeaking out there. So for the people who think that these whole numbers don't mean anything, I mean, come on now. Like it was a very clear area where buyers and sellers were fighting over whether they wanted to sit above or below that number. And the buyers ended up like literally just squeaking out above there. So also positive action, right? That's good that we're seeing on the upside that we're able, despite the constant chop around there, as even as tight as it was, we closed at least above that area. So positive to see that happen. Positive to see us break out of that tight range. But again, lighter volume, but overall trend upwards in that direction. So when we're looking at these charts, things are positive. The trend is still up. We're maintaining key levels. We are building higher lows, most likely, based on what we're seeing. But again, that does not necessarily mean this is an easy market. And I'm going to go finish up through the data, and I'll talk about a couple of things and how I'm looking at this market, despite how strong we've gone trending upwards. So with that said, let's jump over to Deepvue. And we are going to look at the industry groups. So looking at the theme tracker, you can see for the year, miners still doing well. I think a lot of us are seeing miners still performing well. It's not even like they performed well in the beginning of the year. They're performing well like consistently. A lot of these still doing well. Seeing some clear strength in the semiconductors, the blockchain, genomics, solar, growth stocks. So we are seeing the strength that we want to see in certain themes. And, even this week, the month, you're seeing it, it's carrying over. So we're starting to see more of a trend in this area, which is positive, just seeing growth stocks and types of stocks that people like myself and, CANSLIM, Minervini, swing traders, all types of styles of growth stock trading like to see these groups performing well versus your consumer staples and some of your miners and metals and things like that. So positive to see that happen on there. So summarizing everything, what are we looking at? Exposure levels. I always like to talk about that. If you were able to trade this beginning of this rally and get into some stocks that were outperforming the market, you likely built a pretty solid cushion in a lot of these true market leaders or potential true market leaders. Most of those have not broken down. Most of those have not flashed any single kind of negative signs or any sell signals. So depending on how you purchase these stocks and how you pulled yourself into the market, you could be 80 to 100% invested, no problem. And I don't think there is any concern with that because most of those stocks are not flashing sell signals. Now, despite the fact, though, that we had this tight range and we broke out of this tight range, when looking at what's going on within the individual stocks, there are some things that are concerning to me. Number one, I kind of talked about it before, that you have the volume of these breakouts, a lot of them being lower volume. Also, another thing that I've noticed is you have these big gap ups in the beginning of the morning, these big gap ups, and things look extremely, extremely positive. And then whether it's news related or just stock related, these stocks then reverse and break back down. And I know many people who bought these big gap ups into buy ranges 5, 6, 7+%, only to see the stock reverse and stop them out that day, which could be extremely frustrating. So let's face it, it's clear this is not an easy dollar market. This is, as Minervini would constantly label, that hard penny market. We're getting these reversing on breakouts. We're getting some of these stocks that led coming up to this point of this sideways action. We're getting this tightness, this pausing, this choppiness, this sideways action that isn't stopping you out, but is making maybe newer buys a lot more difficult. So what is this telling me? This is telling me I got to be more patient. This is telling me for first, one of the practices I put into play this week is I am not buying in that first hour bar. I am not buying these early morning gap ups in this market. I am being a little more patient. I am willing to see something get extended and me have to get basically just sit and watch it go without me because of how much I'm seeing these reversals after these big gaps up. Even to the point, I know some people like looking at that first hour bar. If you can break the high, using that as a way to protect themselves of reversals. Even on that side of things, I'm being very, very cautious. Most of my buys I'm looking at towards the end of the day if things are holding up, and that's at least making me feel a little bit more comfortable. I am limiting my new buys. I am limiting my exposure, and I'm really trying to focus on just managing the current trades that I had bought from this or beginning of this rally going back a couple of weeks ago. So just understand the type of market we're in. Understand that things can be a little bit more difficult, despite that we are in the green, despite that there's a power trend, despite that things are now through some key levels and edging up. There can still be some sideways, some chops, some things that are concerning. But with a lot of this sideways action that we have going on, there are a lot of stocks that are setting up. There are a lot of things that are creating tight handles or high type flags or power play type setups, things that are giving people an opportunity to get into stocks that they may have missed in the beginning of this. So there's a lot of positive that is coming into this. It just requires some patience. Nick Schmidt over at Traderline and Deepvue, he had mentioned and said this, which I thought was a great point, how in this sideways action, in these pullbacks, they're positive things. They allow us to see these stocks that are outperforming, the stocks that don't get annihilated, the stocks that pull back to a healthy level and do not completely roll over. Those are the stocks that we want to focus in. So after this big move up, after we see a giant kind of mass broad market move, now seeing how these stocks handle the sideways and pullback action gives you the opportunity to know maybe where the big institutions are holding their money and not selling off, and most likely creating an opportunity for the next market. So all in all, be disciplined. You can easily be outperforming this market right now. It gave you the opportunity. If you didn't force trades, if you didn't overtrade, there's no reason that most of you cannot be outperforming this market and beating the S&P, beating the NASDAQ, beating the Dow. But do not let yourself get dragged over the coals. It can be very, very easy in these types of markets to just get that death by 1,000 cuts type of thing. See all the progress that you've made just completely wash out. So when the time comes, when the broader market seems to move, when we see more breakouts and those breakouts continue to work and the kind of pressure comes off, yeah, then absolutely, it's time to press on the gas. But right now, personally, I'm just going to be a little bit more patient, and I'm really looking for that true high volume move, those big high volume breakouts. Trying not to force anything until I get to see that. Lastly, I'm just going to highlight a couple. We'll jump over back to Deepvue. Just going to highlight a couple of stocks. One big one that I do own that I am watching like a hawk is Duolingo. You got a very nice high type flag, very nice power play setup here. You got a stock that from about here to here, you're just under 100% of a move from as we started going up the right side. Really, if you go from the cup point, as I add 100 of these, sorry about that, you have basically a over 100% move from the bottom over here. And let me get that out of there. You see the volume, big volume move up, volume starts to taper off. And then right as we hit those peaks, we have this nice 3-week tight. And in this range, even from peak to trough, you got less than 10%. And this closing range even tighter, which is positive action. And like when you look at the daily, Like it's just that nice uniform. Besides this day here, um, real tight action. You can see it's so tight that the 10 and the 21 are basically superimposed over each other and flat. Um, the volume really drying up as it's starting to go sideways, and basically giving you a really positive action, showing that the supply should be drying up. And if we can break higher, this is the type of setup that normally produces some big winners. So I'm really watching that 544.93, the high from over here. We almost made it on Friday, but again, got those reversals that we've been talking about. So this is one that is a pretty good chunk of my portfolio right now. But if it makes a nice big breakout here, I'm going to probably look to add a little more juice to this one. Another name that I haven't seen too many people talk about, but let's face it, if you walk around and you look down at people's feet, on, or however they pronounce it, is everywhere. I, as a runner, used to see these all the time in running stores and personally hated the shoe. Like, absolutely hated the shoe. Never bought a pair because every time I tried them on, I did not like them. But with that being said, that doesn't mean anything, because if you walk around, general people, even non-runners, love these shoes, find them extremely comfortable, and they're everywhere, like literally everywhere. Just do yourself a favor. When you're walking around, if you see somebody wearing an athletic shoe, take a look. There's a high probability, I'd say, if you look at 5 people's feet wearing athletic shoes, one of them at least, if not more, is wearing one of these. With that being said, looking at the chart action, you're getting this cup with handle. It is a little deeper. I think it's about 40% of a cup. So yeah, 46. So a little bit deeper of a cup. But one of the things I'll say with that is we're seeing a lot of those deep patterns in this type of market. Hood was one that social media, I was getting a little bit of slack for even looking at it because how deep the pullback was. But as we've seen Hood work out, like there's just a lot of deep patterns. So it's kind of what the market has given us. Obviously more prone to failure, but regardless, nice cup, some volume coming in over here, earnings over here. And then right after that earnings report, we had some tightness. We see the volume drying up. It's kind of rolling over. Hopefully we can really have this turn into a nice handle where we can get some high volume breakout above the high over here. Again, it looked like we were trying to it a couple times and we kind of reversed. So just really being patient, but some real nice tight sideways action on this one too. One that I'm going to be watching. Last one I'll bring up, and this isn't all there's out there. There's a ton of different names, is Dutch Bros. Everybody's talking about this one. You got a basic classic, not only cup with handle, but you got this VCP type of pattern where you have this kind of these pullbacks, and hopefully this is really just tightening up. I did make a purchase here on that Thursday, but Trump and Elon knocked me right back down. I didn't get stopped out of it, obviously, because of how tight this is and how this is working, but good to kind of see we're finding some real true support there at the 10-day simple moving average. The overall pattern looks really nice. The company in and of itself, looking at the fundamentals, oops, wrong one. Looking at the fundamentals, the company looks like it's doing a pretty good job with its earnings, its sales. It's definitely a name that I have been watching for a while. So yeah, just another one of these names, but there's so many out there. It's just a matter of really being patient. So a couple I wanted to highlight. Other than that, though, that is all we have for this week. Look, be patient, keep doing the work, don't get discouraged, and yeah, it's just part of the market. Not every market's going to rip and roar, and things aren't always going to be an easy dollar market. So you got to know when to hit up the gas and when to be a little more patient. Protect those gains, get ready to make money when we have a real easy market that fits your strategy. Appreciate it, everybody. YouTube, I'm going to be always posting these on YouTube, so the link is up there. A lot of you are watching on Twitter, X. We got Discord as always. About almost 900 people in there, 900 CANSLIM intermediate style traders. And then there's my email. Not that anybody really uses email anymore, but if you want to reach out to me, feel free. And also, if you like Deepvue, I've been using it, keep posting it. I'll put a link in the YouTube description for my Deepvue Link and a coupon code to get you 12% off. Give it a shot. I do monthly onboardings and one-on-one sessions to help people get set up with Deepvue. Really, really loving the tool. It's extremely, extremely powerful for one of the best prices, I think, of any tool in the market. So that's all I got. Thank you, everybody, and see you again next week.